have seen in the news that there's tons of acquisitions happening in the real estate brokerage space, and agents are dropping like flies. If you want to know what's actually going on in the real estate market and why it's happening, watch this video. This will be interesting to you if you are a buyer, a seller, an investor, or a real estate agent. This is the story and the information that you need to know, because we are seeing record numbers of agents give up at this point in the market cycle. So obviously we had this massive explosion of number of closed sales, and now that's dropped all the way from the peak for existing home sales only, from 6.6 million home sales all the way down to about 4 million home sales. And this is why agents are really hurting. So we all know that the top 10% of agents do 90% of the business. Sellers, you'll be really interested to hear this one, because it's not what you think it is. Now, the National Association of Realtors just came out with their own estimates that 300,000 agents are planned to leave this business by the end of the year. That's an attrition of 20% of their own agents. And we expect that in some studies, there's even higher amounts of agents that will be leaving the industry over the next 2 to 3 years. And the reasons why that's happening may really interest you. If you're doing real estate or working with a real estate agent, this is a really interesting fact that you need to know. So this is one of the things that we're seeing also, is that there's a ton of agents out there who are going into referral only brokerages while earning income from their databases. So they're not even selling anymore. They're just getting your information and then passing your information off to somebody else, which is why you need to ask, am I being referred to somebody? Because that really changes the way that your business operates. Now, this is the data that we've collected from various sources. There's that information that goes around that 71% of agents didn't even sell a single house last year. But the difference is how long the agent has been in the industry. So if their experience level is 0 to 2 years, their median income level is $8,100, which is basically one sale. For 16 years, it's $78,900, which after expenses is really close to poverty level of income. And that's where I want to talk in. The majority of real estate agents are earning a poverty level of income or lower, and that is crazy. I'm going to show you the numbers on one of these slides that's going to blow your mind. But the median income for a realtor in 2023 specifically, the most recent data we have was $55,800. And no, that's not a typo. That means half of agents are making less than $55,800. And the numbers continue to spread, right? So you see the stat of 71% didn't sell a house to nearly 50% of agents didn't sell a house. I can tell you, even if they sell one house, that's not enough after you take into account the licensing fees, all the other fees that we have. But basically, the industry standards are so freaking low. And this is why buyers and sellers get super frustrated. They hire their friend. They hire somebody that they don't interview. They don't ask them any questions. How many houses did you sell last year? Are you full-time? Are you a professional? Because even stats in Florida, for example, show that up to 90% of real estate agents here are part-time. This isn't their full-time thing. And that is a real problem, because you don't want somebody working on selling your largest financial asset of your house if they're not really focused on doing it. Now, I know a lot of part-time agents who are fantastic, but I know more that are not great at all. So, and there's frankly brokerages who collect these 1 unit to 2 unit agents. So you need to at all costs probably avoid these brokerages that just look to accumulate all of these low producers. And if they accumulate 500, 600, 700 agents that sell one house a year, then their brokerage financials make sense. But that does nothing to help the consumer. And that's why I think this is such an important video for you to understand, is that the numbers tell you everything, what you need to do. You need to interview the agents. You need to understand a brokerage that's for producing real estate agents that know what they're doing versus ones that are just hobbyists. I think there's a massive difference. Momentum Realty Hours, the average agent makes $80,000 to $100,000 a year, which is fantastic. And that's way above 2 to 4 times higher than what these other brokerages are doing. They have the experience level to get a different outcome. But part of the reason why most agents fail is because they don't survive long enough to build. Most agents give up in the first 5 years. They don't survive long enough to get referrals from repeat customers, a database that continues to compound over time. They have no systems. They're running around with their heads cut off. They don't track anything. They have no systems, nothing. That's where our company does completely differently. We know how to do it, and we teach other agents how to do it as well. And our agents, because of this, they have better training, better resources. They go out there and do a better job for the buyers and sellers. But agents, at the end of the day, they don't understand that they're actually in a lead acquisition business that happens to also, when they get the business in, do a ton of marketing. And this is the problem. Most agents won't do the basics to actually get and capture the information, because there's a huge gap between going out and hunting for business versus servicing business. Those are completely different personalities for the majority of people. Now, here's what we're seeing across the board. From 2012, this is what we saw. We saw the surviving agents that survived the great financial crisis. They dominated, right? Home sales were low, agent counts were low, and the survivors that came out of that, they grinded for the next 10 years, and they are some of the best agents that came through that period of time. Now, what happened in 2021 is completely different. We had an explosive home sales, the agent counts went up, and the money was easy. Like, I mean, everybody was motivated to buy right away. That you didn't really need a lot of skill, and there's a lot of door openers and cold call kind of Uber driver type agents that are out there. But now the market has changed. Now the Fed is moving rates. Rates continue to move higher today. We see that home sales are weak. The agent count is still high, and it's going to drop. And the result is we're going to have a massive washout of what I call transactional agents. So there's two types of agents. Number one, there's transactional agents. These are the agents that depend on the big aggregators of leads, which, I won't put their names out here, but basically they buy your leads and they refer the leads to you. They have no database ownership. They're not following up with their database. They're not doing client appreciation events. They don't care about the customer at all. They're just there to get a paycheck. They get inconsistent lead flow because of this, because they have no consistent business, and they have extremely low margins due to their splits, and they survive generally only in hot markets around the country during periods of growth, which you can be a transactional agent when the market is booming. When it's not, it becomes extremely challenging. We're seeing that some of these large transactional agents that teamed up with these online portals, their businesses are down 30 to 40%. The other agents who are the operators, is what I call them, are saying, this is awesome. Now's my time to take market share and do things differently. These operators are focused on media. They're focused on their database. They care about repeat and referral, high margin business. They leverage through systems and staff. We have a lot of that, help with open houses, help with showings at our company, investing outside commissions. Like, we actually buy houses to flip, help the seller out as well if they need a cash offer. And they build what I call a personal brand. And this is so much different than a transactional agent who does none of these things. The second share, this group of operators, are the ones who are gaining market share rapidly. But now I'm going to explain to you why the majority of agents, even in the operator category, do not make enough money. And this is going to completely piss off sellers. I totally understand, because you think that you're paying 5, 6, it's all negotiable, but a percentage that's way higher than what you think the agent deserves. Well, there's a lot of costs that go behind the scenes that most people don't realize. So first, I'm going to show you where in our market, the majority of agents basically end up. And this data has been, I know this is 23 to 24. It's worse now. Okay. Agents are basically either moving up or they're moving down. The majority of agents are moving down and moving out from this production bucket. But this is the Northeast Florida Association of Realtors, MLS. This is the percentage of agents by their volume bucket. You can see that 76% of real estate agents sell less than $2 million in closed sales per year. Now, if you're selling less than $2 million in closed sales per year, you're basically on the poverty level of income. And that's why this number is so important. It's getting really bad. Now, those agents in the middle market, from the 2 to 8 million, those are the agents who are really trying to figure out how to have success in the business. Maybe they make a little bit of profit. They're doing the business full time, but it's not really enough to really move the needle for their life financially. And then you have the top 4%, 5% of agents that just crush and do the majority of the business out there in the marketplace. But I think this chart is just a really big eye opener for those of you watching. And tell me what it's like in your market. Do you see things similarly in your market? I think I pull this data custom and build it myself because it's that important. I want the sellers to understand, if you hire 76% of the agents, you're going to get those part-time results the majority of the time. And that's why you get mad. But if you focus on this percentage here, the top 5%, they are absolutely worth the commission that you are paying for. And this is the buckets, this mid and high end bucket. That's where our company focuses on. We always have agents in these buckets who join our company for sure. And when we can help them get to the higher level buckets. But the majority of the agents that our company serves are these higher level buckets. We're focused on the top 25% of the people who want to make a career out of selling real estate in a massive business. Now, here's the math. Okay. This just breaks down. And I hope this helps you out if you're a seller looking at this, why you don't hire agents that don't do a lot of production. They don't make any money, okay, when they actually look at their splits. Look at this. They sell 7 houses a year at 300,000. That's $2 million in volume. They make $50,000 off of that. But most of these big box brokerages, which you're seeing all consolidate, and I'll be sharing a graph on that later, they charge you an arm and a leg, 1/3 of the commission that you pay them. Even if there's no split to one of these big portals, which could take up to 40%, which means the agents only get 25%, these brokerages are taking 36% of the money, up to usually a cap of $18,000 to $25,000, depends on where you live. They charge errors and omissions fees. They have to pay a royalty to the head franchise if they're at a franchise. They're paying monthly fees. They also have to pay transaction broker fee. All of these fees, they get feed to death. Look at this. The broker keeps 52% of their income after all of these fees when the agent only keeps 42%. Then they have to pay for their license. They have other business costs. You don't think they have to pay for the gas. They have to pay for their yard signs. They have to pay for all these things to get around town. So the profit to the agent is $17,000, but then they have to pay employment tax, obviously, and federal tax, at least on that money if they don't have another job. So they make $12,000. Now, this is crazy. This is 75% of the agents. This is why the numbers make no sense. This is why you need to interview. You need to get with the top agents. I don't know anybody who's motivated out there to work an entire year trying to sell real estate for $12,000. It's a very hard life to live, and that's why we say, that's the number of agents that are in the poverty level. Well, let's double it, right? Let's go to 13 units. Let's go to $4 million in volume. Well, let's look at this. When you kind of break that out, the same cycle, they're only making $45,000. Well, that's not enough in most areas as a net to live off of. You're talking about, $3,800 a month to live off of after tax. That's really hard. And that's if your business expenses stay the same. And most time they don't stay the same. They're actually moving up as you do more production. Now look at this. This is where the math gets to be where, hey, it makes sense to do real estate and you're going after those 6 figures. Most people come to real estate say, hey, I want 6 figures. I want 6 figures. It's usually doesn't happen the first year for everybody. Sometimes it does. For me, I made $200,000 selling 66 homes my first year, my first full year in 2016. But look at this. This is only 1.43% of agents. These are agents that you get a great experience selling your house. This is where the raving fans are, but it's only 1.43% of agents, and they're making over $100,000. That's assuming their business expenses are still the same. A lot of this time, their business expenses will double and triple, and they make less than 6 figures for sure. But this is where the math is really hard for real estate agents. So even the top 1%, 1.5% of agents aren't necessarily making $100,000. And that's where I want you to understand as a seller and a buyer that this is the case. You need to interview and find the best real estate agent who can represent you. There's other issues, right? There's taxes. Agents are notorious. Salespeople are notorious for spending every dollar that they make, which is a huge problem. And then the market changes, right? Like what we've had right now. But a lot of people had tons of business coming in. They didn't change their habits. When the market changed, it dropped, 40%. And there's no 401k or pension plan. So we have in our business, and you can go to movewithmomentum.com, we have tons of information about how we change the way that real estate's being done and how we process agents so they can actually have a long-term option if they want to get out of real estate because they've become so financially successful selling real estate. We have changed the game in the brokerage model, on the splits, on the leverage, on all this stuff inside what we call our tribe. So if you're interested in that, go to movewithmomentum.com. But what's happening with the brokerages right now? Well, they're massively in debt. They are consolidating because when the sales dropped, they had all this overhead from these fancy offices that nobody was going to. After 2020 to 2022, when nobody went to the office, basically people didn't come back to the office, very few. So people got used to working from home or on the road or at coffee shops. But there's these acquisitions that are happening because these are all bloated. They have the repeat systems, repeat costs, repeat staff, everything. We're seeing brokerages close down across the board. And instead of closing or going into default on their debt, they're just acquiring each other, rolling them up and trying to find a path to profitability by giving you title services, mortgage services, insurance services, inspection services, you name it. They're trying to bundle the services together to try to make it work for them. Look at this. This is an acquisition. Compass acquires Christie's. So Christie's is now part of Compass. It's a huge deal. They pretend to be luxury. There's no really a luxury brand anymore. It's like each agent is individually their own brand. So, I don't like that people keep pitching, oh, it's a luxury brand, luxury brand. There's Compass agents here selling, $50,000 houses, $100,000 houses. Okay. So it's not like a luxury brand, which is pretty interesting. Rocket acquired Redfin, right? Here's another acquisition, right? They wanted to get the search integration. They acquired Mr. Cooper, which is a servicing company. Compass acquired Anywhere Real Estate. This was a huge deal that happened in 2025 and created this massive giant of all these franchises. So now you have this cloud brokerage doing the franchising thing because Anywhere Real Estate had tons of franchises. Their owners weren't making money. They had all this office staff, all this office inventory overhead. And basically what Wall Street's trying to do is consolidate them and then charge everybody more money. And I think the agents need to wake up, because if you're one of these Wall Street companies, again, their only reason for existing is to make as much money off of you as possible. They want you to work as long as humanly possible at their company. They want to tie you in with phantom stock, like with stock options and things like that that don't vest for a couple of years. They even sometimes pay you $10,000 to come to their company, and then they lock you up for a period of years. They'll do anything to try to get as much volume as possible to show the numbers to Wall Street. But just to be clear, it's not to help you, it's to help the investors. They have a fiduciary duty to make as much money off of you as humanly possible that they can without you leaving. Now we're seeing this even more recently. Real Brokerage is buying Remax, which is a crazy brand move because Real is a virtual company, and then Remax has all these franchises. So and this is partly because like Compass has over $400 million in debt. Remax is loaded up with debt. Now we have all these companies just moving together that are bloated up with debt. And the real, like what's actually happening, if you look on the ground with people transitioning, is people are going away from the Wall Street companies and they're moving to local independent brokerages that aren't going to nickel and dime them and change the terms of the deal every single year. So this is really interesting. I think that they're going to be in massive trouble. And what these companies are trying to do is build portals to get the leads to compete with Zillow. So this is a really interesting thing that you want to be watching moving forward. But again, if you're a seller, you need to interview to make sure that the agent, just because somebody's at Compass or Sotheby's or Christie's or Real or whatever, you have to find the agent that actually produces. The name doesn't mean anything. We all know that, right? Because only 2% of people choose off of brand, but it's important for you to realize that you need to interview and you need to ask the hard questions. How many houses do you sell in the last 12 months? Where can I see 5-star reviews? Where can I see information about what the support is going to look like as I go through the transaction, the marketing through the transaction, right? Have the agent be extremely organized and don't just hire anybody. So that's my point on that. So here's the real estate brokerage reality. So despite these crazy fees from the brokerage, most brokers don't actually make profit. I was sitting in a meeting once and the conversation was about profitability for brokerages, and they said less than 90% of brokerages were profitable. So only 10% of brokerages were profitable, and those 10% who were profitable made less than $100,000 a year, which is crazy because everyone knows managing real estate agents is really hard. It's like herding cats. It's very difficult to get them to do things, to adopt things, to do, whatever you need to do. It's very challenging to increase production in a lot of ways. We have systems, we're able to take them exactly through the processes of things that actually move the needle, not shiny objects, not like technology that, I'm going to promise you all these leads. We don't do that. We pitch hard work. Here's what it's going to take for you to do a great job for consumers so you get the referral business on the back end. And then here's how you keep a relationship with the customer long term. We care about the actual service. Again, we're operators. We're not the order takers. And I think there's a massive difference between the two. And most of these public brokers, they don't care who's at their company. They just want as many bodies as humanly possible. They don't care how much they produce because they need everybody to pay them a monthly fee that goes to the bottom line and then to just show the numbers to Wall Street to make sure that they're growing so their stock price doesn't go down. So that's the reality, right? They have high overhead, low producing agents, and the training doesn't work because they don't focus on production. They focus on the shiny objects. Same thing with real estate teams. You may see this out there. You might be focused on the team. Goal of the team profit is around usually 35% or higher, but the majority of real estate teams operate on less than 20%. So again, if you're paying a 3% commission, let's say it's $10,000, they're actually profiting about $2,000 on that entire, whatever they did with your property. So this is why usually teams implode within 5 years because they're not built correctly. Their margins aren't high enough. I know some teams right now, they have negative margins. They're going out of business. They're firing people because the sales aren't there. And that's exactly what's happening with the consolidation of the industry. And luxury is honestly like you have higher expenses due to marketing. It takes more time. And often with luxury, the commission percentage is lower, usually 1.5 or 2%. So that's the main issue. So what's the solution, right? Most brokerages and agents, they need higher volume, they need high profitability, they need a business that's based off of referrals, not transactional, and they need to think long term. They can't be thinking like, what's the next 1 year, 2 year? They need to build the foundation, and it needs to compound every single year. The number one agents in our market, they're doing a couple things. They're referral based, they're high price point, and they've been in the industry for 10 years, and they're just heads down. They don't get into politics. A lot of them don't even go to the office at all. They never hang out at the brokerage, and that's why they're moving away from these large franchise models where they're offering all this stuff but charging an arm and a leg to get it, and then nobody uses it, but you're still paying for it. So it's something you need to think about. And I actually built a calculator on the Move with Momentum website where if you want to do the math as an agent, you can do the math and figure out what the cost difference is. How much more money can I save over 5 years being with this company versus that company? And I'm happy to share that with you. So look, if you're a seller, I'd love to hear from you. Did you know that agents didn't make as much money as you thought they did? Or is this just, you're not surprised? I'd love to hear from that. Are you seeing the consolidation in the industry in your market as well? I'd love to hear what you think of the acquisitions that are happening. And I want you to ask your local agent how much money they make. Let's see if they're actually transparent about it. This is something we talk about in our company every single week because we focus on what we call the value metrics, not the vanity metrics. Vanity metrics is sales, units, volume. Value metrics are how much profit did you make? What's your lifestyle like? Are you building wealth? All those things that matter. And of course, service above everything else. Number one thing is service. If you can't provide good service, then please exit the industry. If you're a transactional agent, I recommend you just exit now. Do us all a favor. If you don't care about the customer experience, you don't care about the other agents in your marketplace, you're just here for a buck, get out of the industry. You probably opt out of the industry in the next couple of years anyway, because you can't compound your business and it's just going to be, you're on this treadmill every single day. So either figure out how to care about people and give a great experience or get out. That's my advice to you. But thanks for watching. Give me a comment. Love to hear where you're coming from, what your thoughts are on today's video. I'll be coming to you live on Friday for a 30-minute market update video. Obviously, we saw mortgage rates just jack up this week. It's going to really slow down busy season. So if you have any questions from now until then, you can follow me on X at John Brooks. You can also go to my Substack, johnbrooks@substack.com. Look forward to connecting with you and see you soon.